Good morning. Good morning. Man, this is a very early morning, but if you're on the East Coast, I guess it's late morning for you. I just want to make sure my audio is good. My audio is pretty good. I got Bloomberg News ready to go. So, welcome to this special live stream session with the release of the Consumer Price Index, or the latest inflation data for the month of April 2024, which is set to be released in about 15 minutes at 5:30 a.m. Pacific Standard Time or 8:30 a.m. Eastern Standard Time. And I have Bloomberg on live TV ready to go when it happens. And we're going to have double live streams today. And I haven't done that in a long time. They just happen to line up. And also, for the first time in a while, we're going to get the retail sales report from the Census Bureau at the same time the latest inflation report comes out in 15 minutes. And this is going to be one of the two crucial inflation reports before the Fed meeting on June 12th, when they announced their decision to keep the interest rates steady or drop the interest rates by maybe 25 basis points. And they're going to have another inflation report on the same day the Fed makes this decision on interest rates on June 12th. So mark it on your calendar and be sure to subscribe for those live updates. And the Fed has not raised interest rates since July 26, 2023, which maintained the Fed funds rate between 5.25 to 5.5%. And I have heard many arguments from people that they just didn't raise enough. We'll see, right? And there are some economic weaknesses that I talked about in the last live stream. Some people say that they should have raised it to 5.75 to 6%, but the homes are already very hard to buy right now. But anyway, I'm going to have another live stream scheduled in less than 3 hours at 8 a.m. Pacific Standard Time or 11 a.m. Eastern Standard Time. So be sure to stay tuned and get the alerts, because I'm going to talk about how to achieve FIRE by age using my financial independence calculator. But anyway, while economists, let me pull this up here and make sure. Well, what was I going to say? Economists and bankers are expecting CPI today to tick down for the month of April. The PPI report just came out yesterday morning, and PPI is the producer price index, while CPI is the consumer price index. The PPI for the month of April came in more than expected, okay, with stronger gains in the cost of services like portfolio management and hotel accommodations, indicating that inflation remained high early in the second quarter. The PPI increased by 0.5% last month after falling by 0.1% in March, or it was about 0.3%. And this is triggering many stock market investors to predict that the Fed to cut interest rates as early as July, but as late as September. And as of right now, the CME Watch tool right now is predicting that the Fed will maintain the interest rates at 5.25 to 5.5% for the June FOMC meeting. And this prediction could change drastically if the inflation reports come in cooler than expected today and the one in June. Jerome Powell at the last press conference said that the Fed is paying very close attention to these inflation reports before they make the interest rate decision. And that's why I go live stream every single time it comes out if CPI. But anyway, if CPI comes out hotter today and next month, then I don't see a reason why the Fed would even attempt to drop interest rates in June or possibly even in July. And take a look at July here. The CME group is giving, there we go. They're giving us a higher probability, and when I say higher, slightly, right, that the Fed could drop interest rates by 25 basis points in July. And it's really hard to tell about the July prediction, because between today and the June FOMC meeting, we're going to have two inflation reports from today and June 12th, but we're only going to see one inflation report on July 11th between June 12th and July 31st. And July 31st is going to be the next FOMC meeting after June 12th. Excuse me. If the Fed still doesn't see any cooling in the inflation report, then I don't think they're going to even attempt to drop interest rates until September right here, or possibly even 2 days after the election day on November 7th. But a lot of people are saying that, doubtful. I think they're going to drop interest rates, and I kind of agree with them. We'll see what happens. But Anyway, we got the unemployment data about 2 weeks ago, and the job growth came in much less than expected, while the unemployment rate rose to 3.9%. And I talked about this in my last live stream that the Fed is not only paying attention to the inflation report, but they're also paying attention to the labor report, GDP and core PC inflation. The American people are definitely feeling the squeeze in the labor market right now because it's not as easy to find a job now as it used to be in 2021 and 2022. The non-farm payroll came in on, let me see, increased by 175,000 jobs on the month, which was far below the estimate of 240,000. And that was a huge miss, right? And the unemployment rate slightly increased from 3.8 to 3.9%. In average hourly earnings rose 0.2% from the previous month and 3.9% from a year ago, and they were both below the consensus set estimates and an encouraging sign for inflation. And here's the chart. Let me show you this, where all the jobs went and what sectors grew the most. And take a look at this. And I've been going live every time, and this is the biggest slowdown just in the government sector at just 8,000 jobs. And healthcare and social assistance grew the most at 87,000. And transportation and warehousing grew by 21,000 jobs. And retail trade grew by 20,000 jobs. And we're seeing some job losses in the professional and business sectors by 4,000 jobs down here in 1 month. The slower job growth could be good news on the inflation front, but it is a huge concern for economic growth. And I talked about this in the last live stream that unemployment is something I'm really paying attention to, because if the Fed is not being careful and keeps the rates where they are, we could see the unemployment rate rise from 3.9% to potentially the mid 4% range. And I think as soon as the unemployment rate hits 4.5%, the Fed needs to drop interest rates, even if the inflation rate remains at 3%. And if you remember what it was like from 2007 to 2009, let me know in the comment section down below if you do. It is so much worse to go through a recession than high inflation. It's much more difficult to recover from the high unemployment rate. The Fed has a history of reacting slowly, and I'm really hoping that we don't see a recession out of this. And the government just can't afford a recession right now because they're going to lose massive tax revenue and increase government spending by borrowing more money on stimulus checks with job losses and economic weaknesses, right? So if the stock market takes a big hit, the government loses all the capital gains tax because investors wouldn't have any gains to report to the IRS, right? And oh, you know what? Something else. Consumer sentiment. And this is actually really bad news for the economy right here. And as the consumer sentiment index came in way below, it came in way below the estimate. And the University of Michigan survey of consumer sentiment index for May posted an initial reading of 67.5, down from 77.2 in April, and well off the Dow Jones consensus call for 76. That is a decline of 12.7% month over month. And the biggest worry that consumers are expressing is how high inflation, high unemployment, and high interest rates are moving in a unfavorable direction in the year ahead. And this is going to impact how consumers will spend their money in the coming months, which could be somewhat good news for inflation, but it could become a bigger problem for future economic growth. Jerome Powell at the last press conference said that the Fed, he and the Fed, are very firm about the 2% inflation goal before lowering interest rates. And that's not giving consumers confidence to take out a mortgage to buy their homes, right? And we all know that the lower consumer sentiment or consumer confidence can lead to a recession. And let's take a look at the Cleveland Fed projections on the CPI for today. And the CPI for today, let me see, zoom in on that. So year over year is 3.5%, and the core CPI, which excludes the food and energy index, is projected at 3.65%. And consumer spending has been going up, and there's no doubt about that. So with 3.5%, it is still 1.5% higher than the Federal Reserve's target rate. And we're not going to see a sudden drop from 3.5% to 2% in a matter of months. We could see a gradual decrease from 3.5 to 2% moving forward. But like I said, keeping interest rates high comes with side effects. The Q1 GDP already came in lower than expected at a 1.6% annualized rate versus 2.4% after growing at a 3.4% rate in the fourth quarter 2023. And we're going to get the third estimate. I will write this out on the calendar, and because that could become a major catalyst moving forward in the stock market, is that the third estimate of the Q1 GDP is going to come out on June 27, and then the first estimate of the Q2 GDP on July 25th. And that's when we should have a better idea of the direction of our economic growth. And we're also going to get the PCE inflation reading on May 31st, and that's based on the data from businesses, trades, and the GDP. If inflation remains high, but if GDP lowers and unemployment starts to rise, then the Fed should not have a choice but to cut rates to avoid a recession. And if we see a significant job losses around the country, we could see an increase in mortgage defaults and an oversupply of existing homes for sale. And if you're wondering how home prices can decline from where they are now, that is exactly how. Could it happen? Sure. If we see rounds of layoffs continue to happen around the country, then the volume of home sales could potentially increase. But the problem right now is that the inventory level is still low because people don't want to sell their homes with a 3% interest rate and move up to a 6 or 7% interest rate, right? The labor report still shows some strengths even after a setback after the last one. In my opinion, though, some home prices will remain high, but also remain flat because renting in some areas is more affordable than buying a home. But some areas are still more expensive to rent than buying a home. And however, if the Fed cuts interest rates, the home prices could increase when more buyers come back into the market. But whatever happens, do not buy a home you can't afford. If you overpay for your home, you're going to become house poor. Now, I've done that before. Don't do it. And that's not something you want to happen, because then you won't have any room in your budget to invest or have discretionary spending. Promise you on that. Anyway. Oh, hey, good morning. From Lakeland, Florida. Awesome. And from Utah here. Awesome. Good morning to you guys. Appreciate you guys tuning in. I do want to connect to Bloomberg right here, right before the announcement. Let me see here. Hello, Bloomberg. Okay, so I'm going to have the inflation report pull up because it is coming out in about 1 minute. And oh man, it is so early. How are you guys up so early? Wow, I guess some of you guys are on the East Coast, so that's not so bad. But I'm gonna, if I were living on the East Coast, I want to one day. That'd be great. I don't know about Florida though. Last time I went there, I saw thought I saw like a alligator. And I'm like, man, you guys are just hanging out with those, on the streets. And yeah, I thought it was really interesting. I think that was at the time I went to Disney World. I don't know, but man, another one from Orlando. Hello, bunch of Florida folks. That's awesome. Yeah. All right, let me go ahead and unmute this.
Welcome to the world of decentralized finance.
With a surge in Bitcoin,
Should be coming out in about 25 seconds.
Bloomberg's covering all things crypto. The people.
This is a political attack,
and it's on the Bureau of Labor
Statistics.
Really a record-breaking moment.
Bitcoin CPI, and I'm going to show that in a second
technology.
Here.
Awareness
Should be coming out
is
shortly.
grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Hey, this is what you've been waiting for. Retail sales, CPI data just around the corner, the scores going into it. And the equity market on the S&P 500 totally unchanged. In the bond market,
so
2-year, 10-year, 30-year, shaping up as follows. The 2-year, 4.7765. Bear in mind, last time we got a CPI print, upside surprise, saw a move of more than 20 basis points at the front end of the curve.
3.4%. All right, so it is a meet.
Mike McKee.
3.6%.
Well, we're waiting for the numbers to drop, and they've just fallen, and we have a downside surprise to CPI. Comes in up 0.3%, as does the core rate for the month. So that pushes the year-over-year CPI to 3.4% from 3.5%, and ex-food and energy, the core, to 3.6% from 3.8%. So an inflation story that is good news for the Fed for once. Everybody react in the bond market, please. Retail sales come in little weaker than expected, 0.0%. Last month revised down to 0.6%. Ex-autos, 0.2% from 0.9. The core group, which is what we really care about, is down 0.3% after a 1% rise the month before. So at this point, what we're looking at is a economy that seems to be slowing down, consumer spending slowing, but prices dropping at the same time, which could be a recipe for Fed rate cuts if you want to hurry up and overreact.
And the market reacting to it, Mike McKee. Not for me to say they're overreacting, but certainly reacting to it. We often say the first move isn't always the right move, but this is certainly the initial move. Equity futures positive by 0.6% on the S&P, the Nasdaq moving higher by a similar amount. On the Russell, up by 1.5%. And you can say thank you to the bond market. Switch up the board. In the bond market right now, double-digit move at the front end, lower by 10 basis points on a 2-year to 4.7132. We're down by 10 basis points as well on a US 10-year to 4.3361. If you turn to foreign exchange, you can guess what the euro is doing against the US dollar. The euro is stronger by 0.5% at about 108.69. Congratulations to these 63 of 68 people surveyed in our Bloomberg survey for CPI, Lisa, looking for 0.3 on core, and 0.3 is what they got.
They got it exactly on the dot. And frankly, this is the rally that everybody was expecting as well. As we pointed out, about 49% of people who were surveyed by 22V Research expected just this result. Question I have is, though, where does retail sales fall into that, given the fact that when you take a look at some of the control groups, the control group in particular, down 0.3% versus a gain of 0.1%. When is that not positive necessarily to the momentum of where this is going?
That's retail sales. CPI, if you are just joining us, headline month over month coming in at 0.3. The estimate in our survey 0.4. The previous read 0.4. Stripping out food and energy, we get 0.3% against an estimate of 0.3 and a previous number 0.4. Mike McKee, as you lift the lid on the headline stuff and get into the detail, what stands out for you?
I'm about to get into the detail
we did
after
not
this.
get a big drop as we had hoped in terms of the owner's equivalent rent and the real estate portion of CPI. Owner's equivalent rent comes in up 0.4, which is the same as it has been for the last several months. Rent of shelter comes in at 0.4%. So no real change there. Gasoline prices were up 2.8%. Food, though, was flat on the month, so that contributes to a slightly smaller impact overall. I'll keep looking through those numbers and get you some more. Taking a look at the retail sales numbers, it looks at this point like motor vehicles really made a difference, down 0.8%. So that subtracted a lot from the top line number. Other than that, sporting goods down 0.9, but clothing up 1.6%. Food and grocery stores up 0.6%. And the food services and drinking places, which is kind of the one services industry thing we get, is up 0.2%. So at this point, the weakness seems to be in areas that are not directly, not something people spend a lot of money on a regular basis. You don't buy a car every day, but the things that people were spending money on still saw increases. So I'll let the smarter people analyze all that.
As we put it together, what we're seeing in markets is basically almost a full pricing of a September rate cut as people bring forward the idea that this is the disinflation that so many people have been looking for. You took out owner's equivalent rent. Is that essentially what a lot of people are doing at this point? We heard from Ed Yardeni just now. He cuts that out. A lot of people saying that's noise, focus on the other. Is that what we hear on the Fed as well?
Well, that's kind of what the Fed is going to do. They know that the numbers are lagged in terms of housing, and so they know it's going to take a while for that to come down. It's taken a lot longer than they anticipated, but it isn't really representative of what overall inflation is doing, which is kind of why Jay Powell brought up the supercore. Supercore does rise on a year-over-year basis and a month-over-month basis. Let's see what we get, 0.42, which is down on a month-over-month basis, up a little bit year-over-year. But the supercore, which takes out housing, does show some progress in terms of services inflation.
Mike McKee, thank you, sir. Stay close. We'll come back to you.
Yeah, so I'm going to pull up the details here, which I have it pulled up on my iPad here. Let me pull this up just real quick. So I want to go into the detail, like no kidding detail of the CPI. So if you take out shelter, if you take out the mortgage rent, right? So that's what they were talking about. Inflation is down a lot. And it's, some could even argue, and I might even argue that, they could probably start cutting interest rates now. But then, they know, the Fed knows that as soon as they start cutting interest rates, people are going to go right back into the home market, right? And then that inflation rate is going to go back up. What they don't want to see at all is going back into the 4% range for the CPI. But anyway, I do want to go into it. You know what? Before I do it, hello from Minnesota. Sorry if I said it like that. I don't know why I said it like that. Sorry. And good morning, Franklin Santana. It's a great name, by the way. Good to have you guys. But anyway, okay, so the food index, I do want to scroll up here, and you can pull this up on BLS.gov, and they all met, okay? So all the projections, there was 3.4% for the headline CPI and 3.6% core CPI, which is a drop from 3.8%, from the previous month. So good. So far, so good, but let's take a look at this real quick. So this is where you want to pay attention to, okay? So you see where it says April, right? 2024 right there. Far right column, well, the second column from the right, April will be the month-over-month change, okay? And then the far right column right here, that's going to be the 12 months or the year-over-year change. So let's take a look at both of them, all right? All right, so food. Wow, food at home actually decreased by negative 0.2%. It's increased by 1.1% year over year. Food away from home is still going up by 0.3%. And that one is pretty evident. I mean, if you look at Starbucks, McDonald's, all of that, it will be food away from home. And obviously those places are still going up in prices. But food at home, which I would very much prefer to do, is to eat at home. Energy is going up by a little bit. Gasoline has gone up by 2.8%. That is a pretty significant number there. And the fuel oil at 0.9%. Electricity went down by negative 0.1%. And then utility gas services down by negative 2.9%. Okay. All right. So I did talk about that in the last live stream. I was thinking that the energy services, they should be going down for this month. New vehicles down negative 0.4%. And then used vehicles, negative 1.4%. So it is down negative 6.9% for used vehicles. And we can see very deflationary indicator there for the used vehicles. And then we got apparel still going up. And that is a significant increase by 1.2% in just 1 month. That's close, right? Apparel at 1.2%. That is very significant increase. Medical care commodities went up by 0.4. Shelter still very consistent. If you take a look at the bottom right, it's about 0.3 or 0.4 there. And then transportation services went up by 0.9%, which is better than 1.5. But transportation services have been going up a lot for the past year. Medical care services, by 0.4. So if you scroll down and take a look, food, okay, barely any increases. Let's take a look. Index for meats, poultry, fish, and eggs decreased 0.7%. Still a good 7.3% decline in the index for eggs. The fruits and vegetable index declined 0.8% year over the month. Okay, I'm not going to read through all this. Let me take a look here. Energy, yep. So shelter is still going up. Let me see. What is the biggest contributing here? Contributor. Okay, so index for shelter rose in April, as did the index for gasoline. Combined, those two indexes contributed over 70% of the monthly increase in the index for all items. The energy index rose 1.1% over the month. The food index was unchanged. The food at home index declined 0.2%, while the food away from home index rose 0.3%. And I think food away from home is going to steadily decrease going forward. So that's going to be interesting to see, but shelter is continuing to be one of the contributing factors to the CPI rise. So let me pull up the PDF here. Let me make sure that is the correct date. It is. Let me pull it up on. Okay. Cool. So I do want to go all the way to the bottom of the page here. Yep. Okay, can I hide that? Okay, let's see some of the changes here. Okay, still loading. Sorry about that. So while the PDF is still loading here, because it's hundreds of pages, and I don't want to go bore you guys with all the crazy documents, but if you're just tuning in, the headline CPI is a meet. So is the core CPI. It's down to 3.6% core, which is also a meet, and that is down by 3.8% from the previous month. Cool. All right. So is that still loading? Still is. Okay. Yeah. 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 You know, it's probably because I watched this show. What's that called? What is the name of that show? It's like a crime show based out of Fargo. Been watching that. That's a good show. It's pretty entertaining, but the accent there, I'm not gonna make fun of them. It's just really interesting to hear. I'm like, man, these guys. I gotta turn the subtitles on, you know. Anyway. Okay, so let me scroll up here. I know there was one that I have been paying attention to. Okay, let me look at the core CPI here. Okay, so we talked about food. We talked about medical services, transportation services. Yeah, so some of the things that I've been talking about here is like, you know, they say transportation services are going up, but you want to look at the detail, right? What else is going up? You know what? I can't even zoom in on this. So I'm just going to go ahead and scroll. And if you're watching this on your device, any YouTube device like YouTube, iPad, or a phone, you can actually pinch on your screen to zoom in on the on this page here. So I'm gonna try not to move it as much as I can. All right. So motor vehicle maintenance and repair has gone up by 7.6% year over year. And then motor vehicle insurance, and I'm sure you guys are well aware of how much insurance has gone up. And take a look at this. It went up by, I'm gonna highlight it here. Nope. How do I highlight this thing? Okay, it's not letting me. Oh, there it is. There we go. Okay, motor vehicle insurance went up by 1.4%. That's just in 1 month, and it's gone up by 22.6% year over year, which is still insane. And it's actually kind of pissing me off that how much I have to pay in vehicle insurance every month, and how much has gone up every 6 months when I go through the renewal. Let me know if you guys are experiencing the same thing. One thing I have been paying attention to is airline fares. But if you take a look at what's been going on since February here, it's going up by 3.6% and then 4.1%. That is a significant increase. Airline fares went up by 4.1% in just 1 month. but year over year, it's down negative 5.8%. So that they have definitely dropped some prices there. Let's take a look. I'm going to skip food. Eggs have been going down. Coffee's going down. Somebody told me that there's a shortage of chocolates. Is that true? Let me know. I need to do some research on that. I don't want to just say it out loud. I probably shouldn't have said it out loud. Maybe it's not true, but there's a shortage of chocolates. I'm gonna have a problem because I love chocolates. Anyway, sugar, sweets. Let's see. I'm gonna go into food away from home. So food away from home has gone up by about 4.1% here, year over year, and it's still going up by about one. Oh, take a look at that. Food from vending machines and mobile vendors went up by 1.4% in just 1 month. That's crazy. This thing, man, it's gone up by 7.3% year over year. Okay. Energy index, I'm going to skip through that. It's about the same. Wow. Laundry equipment went down by negative 11.6. Interesting. And so if you take a look at the some of the furniture items, right, appliances, they have gone down significantly because fewer people are buying houses right now. So naturally, when you don't buy a home, you don't really want to buy a new appliance. You don't want to put any new flooring in. You don't want to replace your walls or anything like that. So there's the deflationary indications in the appliance sector and the furniture. So, oh, really? There is? Okay. I need to take a look at that. And I need to probably start buying chocolates like everybody bought toilet paper back in 2020. That is a crisis, ladies and gentlemen, just so you guys know. A shortage of chocolates is going to be a problem. I need to make sure we stock it up. That's not good. Why is that happening? Let me know. Okay. Anyway, let me go into it. Oh, that's good. I need to buy some new suits anyway. So it looks like the men's suits gone down negative 2.3% month over month. It's down negative 8.4% year over year. Men's underwear gone up. That's not good. I need to buy more underwear. And let's see. Footwear has gone down. Okay, so this is something that I've been paying attention to. It's this one right here. Can I highlight that? Okay, transportation commodities, less motor fuel. So new vehicles has gone down negative 0.4% and negative 1.3%. For the new cars and new trucks, are down negative 0.2%. Used vehicles, negative 6.9%. So there is an increase in inventory for used vehicles right now. If you're looking to buy a vehicle and you just want to buy something reliable and you're trying to get out of your current debt to buy a used vehicle, now could be a good time to buy. If you could buy with cash, that would be better. But if you can't buy a vehicle with cash, I never recommend taking out a loan more than 2 years. If you can, 3 years is a stretch. 4 years is a far stretch. Okay. The reason is you don't want to take out a loan that's potentially going to put you upside down between the loan amount and what the vehicle's worth. Okay. So you want to have that balance in between. If you can make a down payment on the vehicle purchase, that'd be better. Car loans are probably the second worst debt behind credit cards. And I'm not even counting, I get the payday loans are the worst, but I'm not talking about that, but the regular debt, right? Credit cards, when you carry over the balance, you got to pay 25, 30% in interest. Vehicles, I mean, people argue with me in the past and say that it's only a 7%, 8% loan on the car loan, but dude, your vehicles appreciate by 10 to 15% every year, right? So you're not just paying 7% in interest every year, but you're also losing value on that vehicle. So I do a net worth calculator. We do a net worth statement, right? Either every month or every year. If you look at my live stream from September last year, and you can go to my channel to take a look at it. And the vehicles that my wife and I own are the only ones that depreciate every single year, because we can go to Kelley Blue Book and take a look at the values of our vehicles, right? The value of our vehicles, and they just keep going down and down and down. And you probably, I don't know if I've ever shared what type of vehicle I drive, but I drive a 2018 Tesla Model 3, and that thing has gone down. I believe it's over 65 or 70% since I purchased it in 2018. I love Teslas, I do, but man, they do depreciate fast, and it's one of the reasons why is because Elon Musk keeps dropping prices on Tesla Model 3s. So, you know, unless you have the money or cash to pay for it and avoid paying that interest, try not to take out a car loan for it. But anyway, let me move on. I'll talk about that some other day. Tires have gone down. I have noticed that. It's down about 1.3%. So the reason why I'm talking about transportation right now is because a lot of American people are frustrated with car insurance. Car insurance keeps going up because all these insurance companies are saying that, oh, because car parts are up, vehicle what else? Vehicle repairs are up, right? Then I could argue with them and say, look, the inflation report tells me that these parts are coming down. So you guys are raising prices for your own reasons, you know, to increase your profit margin. Okay. But the other side of the argument, and I watched this on CNBC and I looked at some of the statistics, is that the car accident rate has gone up a lot. I don't know what is going on. I am based out of Vegas, and people are driving like crazy on the road. They are. They don't, like, they're in a hurry. They got a death wish. I don't know, but they are just driving like crazy out there. And I see car accidents everywhere. Vegas accident rate is so high. I always have to make sure that I don't get hit by somebody else, either a drunk driver or, you know, impaired driver just driving on the wrong side of the road. That happens like all the time. So hopefully the rates do come down, but there are always going to be stupid people on the streets, right? You know, driving intoxicated, coming home from the strip, you know, after a night of celebration, and they just don't want to take Uber or something. It's frustrating, but the insurance is probably going to remain high, but hopefully that it does come down with these accessories and tires and parts start to come down, then the insurance rates should come down as well. Yeah, but anyway, that's why I'm paying attention to that. Pet food, if you got any dogs and cats, looks like those prices are coming down. Good news. And wow, photography. If you're a photographer, the equipment and supplies have gone up. Don't know why. Let me see. Computer software has come down. Telephone hardware, calculators have come down. Alcoholic beverages, if you love alcohol, they have started to increase. Beer, man, I love me some whiskey, but that's not so bad. It's increased by 1% year over year. Rent and shelter, here we go. So shelter has a rent of primary residence has gone up 5.4% year over year. Lodging away from home at 0.3%. Let me go ahead and highlight that so you guys can see. And it has increased by 0.3% month over month. Owner's equivalent rent of residences have gone up by 5.8%. So yeah, if you take out shelters from the CPI report, inflation I would bet that the inflation rate is going to be at about 2.4, 2.3% if you don't count rent or mortgages. But they include that, you know. Oh, wow. Yeah. Owner's equivalent rent of primary residence, 5.7%. Tenants and household insurance, 4%. Yeah, they keep going up. Garbage and trash collection, man, they go up too, 5.3%. Domestic services, let me take a look. Medical, household operations, okay. moving, storage, they're pretty stagnant. Nobody's really moving right now. Professional services, let's see, dental gone up 4.1%. And more transportation services. Yeah, so if you're looking to buy used vehicles, they're definitely going up. And take a look at this right here. Motor vehicle insurance, 22.6%. Freaking ridiculous. The 1.4% just in 1 month. Motor vehicle fees gone up 3.6% year over year. Yeah, far outpacing inflation. And it was actually one of the headlines too. Like motor vehicle insurance continues to be one of the headlines for the CPI and how inflation continues to go up. And yeah, it's really hard to justify paying 22.6% year over year. I did the calculation on my budget, and it has gone up about 28% personally, and haven't gotten into a car accident, no tickets, no parking tickets, none of that, and just continue to go up. And probably going to have to switch insurance here for the next one. Okay, so yeah, that's pretty much it. Okay, so everything else you can take a look at it. This is from the straight from the website. If you take a look at, go straight to, I'm losing my train of thought, bls.gov, Bureau of Labor Statistics, and it does come out every single month. The next one that is coming out on June 12th. June 12th. Mark this on your calendar because that's the next CPI report. That's the next time I have 2 live streams on the same day. It's today is the first time I'm doing double live streams in 2024. So we got the CPI that came out today. The stock market is reacting pretty good. Well, actually, it's pretty flat. No, it's up. Never mind. People are happy. So it looks like the S&P 500 is up by 0.5%. Dow futures, it's up 145 points. NASDAQ is doing pretty good. I'm pretty happy with my QQQ. I do need to hedge a little bit in my portfolio, though. I need to kind of talk about that. A little bit of a hedge going forward. A lot of the growth in my account, they're doing pretty well. But yeah, just mark down on your calendar that June 12th, I'm going to go live for the next CPI at 5:15 a.m. Pacific Standard Time and 8:15 a.m. Eastern Standard Time. And then later on that same day at 11 a.m. Pacific Standard Time, or what is that, 2 p.m. Eastern Standard Time, is when the Fed makes their decision to either raise interest rates, keep the rates steady, or lower interest rates. And you know what? Speaking of which, let's take a look at what the CME group said. Let me go and hit refresh on that. So make sure you mark this on your calendar, June 12th. So yeah, they're all predicting that 91.6% they're going to keep the rates steady on June 12th, and 8.4% chance of the rates coming down. I think that's kind of in the bag because we're not going to find out what's going on with our GDP until June 24th, right? And that's well after the Fed meeting on June 12th. So if anything happens between now and July 31st would be the GDP data, unemployment data. That would be another report that we want to pay attention to. If the unemployment data comes in, let's say they miss, right? And they go through another fewer job growth like the one I showed you earlier, then we could see, unemployment rate going from 3.9%, which that's where it is right now. Let's say it goes up to 4% or maybe 4.1%. Then the Fed could be like, okay, maybe we need to cut the rates just a little bit, not because of inflation, but because of the labor, because of unemployment. Because unemployment, as soon as that starts to go up and the consumer sentiment is already down, then we could see a very either deflationary indication or a possible recession. So we have the conversation around hard landing is back again because the Fed is being stubborn about the interest rates. and they really don't want to risk going back into the 4% range. That's what they don't want to do. And if you take a look at 31 July, so now they're looking at 32% chance of dropping interest rates to 5% to 5.25%. That's dropping by 25 basis points. And September 18th, which is a few weeks after my birthday, make sure you guys put that on the calendar here. They're looking to drop interest rates. They have a higher probability of dropping interest rates by 25 basis points, 51.7% right here. Can you guys see that? Okay. And then they have a 20% chance of cutting interest rates by 50 basis points, and they have a 1.4% chance of cutting interest rates by 75 basis points. That is very unlikely for the 75 basis points, unless we see a weak GDP, high unemployment rate, okay, and we have more job losses going into June, July, and August. It's very possible, okay? Now, November 7th, I think, that would be 2 days after the election day. The chances of interest rates coming down is a lot higher, obviously, going to 5% to 5.25, and then they have a higher probability of going down to about 4.5 to 4.75%. So looking to buy a home, looking to invest in real estate, pay attention to what the Fed is doing, pay attention to the CPI, pay attention to the GDP report, pay attention to the real estate market. If you guys are real estate investors, I know many of you guys watching this are, pay attention to what's going on in the market, really, okay? And I really, really appreciate all of you guys tuning in, because, man, it's been a ride. It's amazing how people give me positive feedback and, of course, negative feedback. And I read every single comment that you guys post, even the ones that, trying to recommend, the spam comments with the financial advisor that they recommend. I'm like, man, they're really bots having a conversation with them themselves. I read those too before I delete them, but I want to make sure you guys don't get spammed. But I do want to look at one last thing before I get off live stream here. Chocolate shortages. Oh, that's a real thing. Chocolate shortage. Prices are going up. Chocolates. That's not good. I need to tell my wife we need to load up on chocolates and stock them up. I'm going to buy those chocolates now, and then I'm going to resell them on Amazon for like $200 per Kit Kat. I'm just kidding. I wouldn't do that. But wow, why is there a shortage? Cocoa crops are hit by climate change. Oh, no. It's not good. I had no idea until somebody brought that up. Thank you so much for bringing that up, Franklin. Really appreciate it. I thought it was a rumor, and there is a shortage of chocolates. That's not good. My daughter doesn't like chocolates. I'm like, oh, man. Okay. She's, that's okay if she doesn't like it. I'll eat all the chocolates on Halloween. But yeah, anyway, yeah, have a good one. And appreciate you guys. I'm going to be live streaming again at 8 a.m. in about 2 hours. And I'm going to talk about how to achieve FIRE, financial independence, and retire early at every age using my calculator. And I have some of the announcements in the next live stream. I'm going to go over some of the resources that I have. So hopefully you guys got some good things out of it, and stock up on your chocolates. But anyway, have a good one.